Firstly, just an overview of BOQ and a very quick summary. We've a long and proud history in Queensland since our foundation in 1874. Over the course of 150 years, the group's expanded both organically and through acquisitions to now operate in every state and territory across Australia. We're an ASX listed 100 company with a market capitalisation of approximately 5.2 billion. We have 146 billion in footings. What does that mean? It means that we've got about $80 billion in lending assets and $66 billion in deposits across Australia. We operate out of 4 corporate offices across Brisbane, Sydney, Melbourne and Perth, employ 3,700 people and operate 116 branches predominantly in Queensland. We provide banking services to about 1.5 million Australians through both retail and business banking. On the retail side, we offer mortgages, deposits and savings accounts and complementary products such as insurance and credit cards. We've got a strong presence in business banking, focused on specialist sectors, including health, agriculture and property. And in addition to these sectors, we have long-standing relationships supporting Queensland family businesses across a number of diverse sectors as well. We have a leading finance company with capabilities in equipment finance and novated leasing. And within our portfolio, we operate across 3 distinct brands. The BOQ brand is our relationship brand across retail and business, with a predominant focus on operating here in Queensland. Me Bank is our national retail broker brand. We bought Me Bank in 2021, based in Victoria. And Virgin Money is our lifestyle brand, providing credit cards, insurance and superannuation services. Turning now to our transformation and how we're progressing. BOQ provides a really important banking alternative to the major banks that's centred on our deep customer relationships, our strong Queensland heritage and our niche specialty businesses. As a smaller bank, we're structurally disadvantaged. We're required to hold more capital for the same loans that our major counterparts hold, and we feel the increasing regulatory impost more acutely. The sale of Suncorp Bank to ANZ highlights the challenges in maintaining a mid-tier bank in the current operating environment. We've recognised that for our future success, in light of industry headwinds, the banking returns being at their lowest point in 2 decades, banks are holding more capital than they've held in their history, and gave up about 30% of their margin over the last 3 years. And so you are seeing negative jaws across many of the banks as a result of those changes. Irrespective, bank share prices have been very strong, but certainly banking returns are at the lowest point in 2 decades, with return on equity being at historic lows. Given that, at BOQ we need to make some really bold decisions to fundamentally change the way we operate, but also how we allocate our capital. All companies are operating in an increasingly dynamic market, with many fast-moving disruptive forces driven by rapid technology advancement, changing consumer preferences, heightened competition, increasing regulation, and a highly unpredictable geopolitical environment. In this environment, we need to embrace change as a way of doing business and accept that operating models that may have served us well in the past may not be sustainable in the future. Our future state is a simpler specialist bank, leveraging our Queensland heritage and smaller size and agility to respond quickly, to differentiate and add value to our customers in the specialist sectors where we operate. We're partway through an ambitious transformation across 4 strategic pillars: to structure BOQ to service customers the way they wish to be served, and to provide sustainable returns over the long term for our shareholders. I wanted to touch on 2 of our 4 strategic pillars, strengthening and digitising BOQ. Our strengthened strategic pillar is building stronger financial and operational resilience for BOQ. We're possibly in the strongest financial position in our history, with strong capital and liquidity buffers and a well-secured and diversified credit portfolio. We're addressing the risk weaknesses identified by the board in 2022, which led to required management change, and 2 court enforceable undertakings with our regulators, APRA and AUSTRAC. We're 2 years into these multi-year programs of work to uplift our risk practices and bolster our anti-money laundering and counter-terrorism financing compliance. Through these programs, we're building stronger foundations for BOQ, reducing risk, and have materially uplifted our engagement and transparency with our regulators. I will now talk through a bit more detail on how we're digitising BOQ. Over the last few years, we've made a material investment in addressing our technology deficit and have now largely completed the build of our new, future-fit, digital end-to-end retail bank. This new digital experience far exceeds the experience on our legacy platforms, with a material uplift in our customer ratings. It's also providing a pipeline of lower cost funding, platform stability, and reduced operating costs for the bank, as well as attracting a younger cohort of customers who we can support through a greater lifespan of their financial needs. With the digital bank largely built, we've recently commenced the process of migrating customers off our legacy systems and onto the digital retail bank, with the Me brand of customers the first to migrate. We will complete Me migration next year, with BOQ customers to follow. The progress we've made in digitising our retail bank, combined with the shift in consumer preferences, supported the decision we made in August last year to simplify our distribution channels through converting our franchise owner-manager model to a corporatised branch network. This conversion was completed in March this year, providing the opportunity to focus this network on target growth corridors. While we've consolidated branches through this process, we're investing more business bankers in the branch network and reallocating capital to support small and medium-sized businesses across growth corridors, particularly in Queensland. We've reflected on our strategic shift post the GFC to diversify our credit portfolio nationally and recognise that our core heritage and competitive strength is here in Queensland. As the last standing major Queensland bank, we're re-emphasising our support for Queenslanders and leveraging our 150-year foundational strength in this state. We're recycling and allocating more capital and growing the number of bankers to support Queenslanders. We recently launched our Supporting Queenslanders marketing campaign, and hopefully you would have seen this recently across television, billboards, and bus shelters, and announced sponsorships of both the Queensland Reds and the Ekka. We've also recognised that successful transformations require a cultural shift. Our cultural transformation is a key enabler, driving the changes required to deliver the future state simpler specialist bank. We've set 3 organisational-wide cultural attributes of customer first, outcomes driven, and agile ways of working. Our customer first cultural attribute is about how we support our customers and uplift our customer experience across every aspect of our business. Our focus on outcomes is a shift from our activities-based culture, supported by change in our reward framework to drive improved performance. Our agile attribute is about ways of working, questioning the status quo, being opportunistic and comfortable with change. Our culture is also fostering a safe and inclusive place for our people to thrive, including supporting our communities and charity partners to provide invaluable services to vulnerable Australians. We have a clear strategy and are well progressed in our transformation, having navigated some tough challenges over the past 2 years. Recognising that transformations take time, it's pleasing to see the benefits of an improved customer experience, financial performance, and shareholder returns starting to emerge. While our share price has recovered by 45% over the last 2 years, we recognise this was off a low base, and we have a lot more to do. Turning now to the economy and the outlook for Queensland. We're operating in an increasingly unpredictable environment, making it difficult to forecast economic outcomes. Global markets have been surprisingly stable, despite concerning trends of increasing geopolitical uncertainty, deglobalisation, and increasing sovereign debt. If sustained, at some point, risk may be repriced, potentially impacting asset prices and economic growth. The Australian economy, while slowing, has been resilient, supported by strong employment, government spending, and anticipated further rate cuts. Irrespective of strong employment, the recent economic period has been a difficult one for many Australians, being impacted by cost of living pressures and 13 consecutive interest rate rises. Declining productivity, accelerating wealth inequality, limited supply of low-cost housing, and regulatory overreach are major domestic challenges that need to be addressed in Australia. It's pleasing to see the government call the recent productivity engagement, and hopefully we'll get some outcomes from that. The adoption of generative AI will also need to be considered as we plan for required skills and capabilities and change ways of working. In terms of Queensland, we're very optimistic about the outlook. Queensland has historically grown faster than the national average, and we're seeing that continue through 2025. The state is in the midst of a very strong infrastructure spending cycle. This, combined with strong population growth and an increasingly diversified economy, support our optimism. There are, of course, the same issues faced here in Queensland that I've called out for the domestic economy, with undersupply of housing and cost of living pressures posing challenges for households and small businesses. We're focused on playing our part in supporting the continued growth of this great state and leveraging our proud 150-year heritage. In summary, we're partway through an ambitious and comprehensive transformation. I'm fortunate to work with a very capable and very committed board, executive team, and an employee base who are dedicated to our customers and to the future of BOQ. We're navigating through a period of high disruption, rapid change, with increasing complexity and uncertainty. This requires strong leadership, strategic clarity, resilience, and disciplined focus on execution against what we can control. As I said earlier, we're now starting to see some real benefits from the consistent, disciplined execution of our strategy, both from a customer perspective, but also in our financial performance. At our last half-year result in April, we were pleased to have improved across all of our key financial metrics and held net interest margins stable in a time where margins were challenged across the industry. We still have a way to go in our transformation and are very focused on sustainably improving shareholder returns as we continue to improve the experience for our people and our customers. Thank you again for the opportunity to share the BOQ journey with you today, and I'm happy to open the floor to any questions. Thank you.